Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Barry Habib, and MBS Highway's created exclusively for NMPTV and brought to you by our friends at PRMG. They're working for your best interest. Last week, we heard a lot from the Fed Chair Jerome Powell. He was testifying before both the House and Senate, getting prepared remarks. And in those prepared remarks, he was saying that, we are looking at inflation as being transitory still, but it was at higher levels. He at least acknowledged that. Now, the first day he said that inflation was really not something that surprised anyone. But then the second day he said, well, it was greater than we expected. So which is it, Jerome Powell? And Jerome Powell also talking about the fact that the economy is far away from being in a position to start to take his foot off the gas pedal and start tapering. He also said that the labor markets were far off where they need to be. Now listen, on the labor markets, let's understand this very clearly. We got evidence this week last week on Thursday when we had seen the initial jobless claims numbers show that those states that removed that additional assistance to pay people to stay home, that pandemic unemployment assistance, they started to see people come back to work. They were incented to come back. But the remaining parts of the country, more than half of the states out there in large populous states, they won't see that happen until Labor Day. Now, look, when you're paying people $18 an hour to stay home, you probably can't blame them for wanting to take the summer off, especially if their jobs cause either extra expense or a lot of heartburn or inconvenience. You can't blame them. But they'll probably start coming back to work in September, maybe searching, finding jobs, starting, and then by the time the data hits in October, I anticipate that you'll probably see some robust job gains. Is the Fed in a position at that time to start either tapering or really, really cutting back in the asset purchases? They're already being criticized a lot for this, and people are even saying this is affecting the housing market and overheating the housing market. I think Jerome Powell's really in a tough spot because he's painted himself in a corner. Now, he and Janet Yellen both saying that now we expect inflation for a longer period of time. Janet Yellen saying for several months. But when you add what we've already seen in higher inflation, plus several months more, I don't know, what does that mean? Does that mean a year? Even if inflation eases back, they aren't doing the math. Because once you get that bump of inflation, it's from this higher starting point that you get the slower levels. In order for it to come back down to a normal level, you'd have to have deflation. We're not seeing that as a possibility. Now, why do we bring this up? Because interest rates really have remained very, very low. I mean, take the 10-year Treasury. If that 10-year Treasury, as an investor, if you're getting a return of 1.4%, but inflation's at 5%, flat out, you're losing money. So what is happening here? It's that the Fed is buying so much of this stuff and so much mortgage-backed securities that they're doing something called yield curve control. And that's why this taper talk could be very important, because if the Fed does stop these purchases or materially slows them down, we could see a rocky road ahead for interest rates. It really depends on how long they do it, how much they do, and what the plan is. History tells us when the Fed's tried to do this, the market acts up and the Fed gets scared and they stop, they freeze, they panic. So will they have the gumption, the will to want to really go through with a taper, or are they already setting the stage to kick the can down the road? This may be Jerome Powell's last year's Fed chair, and maybe he just doesn't want to be the guy that roils the stock market, that disrupts the recovery, and maybe he doesn't want that as his legacy. It's really hard to say, but it's going to be an interesting ride, and we'll watch that. Now this week, let's see what investors think about this higher inflation, because we're going to get a 20-year bond auction. I think that's going to be very telling, because remember when we got the 30-year bond auction? That 30-year bond auction caused a big move down in mortgage-backed security prices and a bump up in interest rates. But then Jerome Powell came in and calmed things down, saying, we're ways off from doing anything, so don't worry. How will the markets respond this week? Well, we'll let you know every single day. Hope that you join us on MBS Highway, because we've got all the tools to remove points of friction, give you exponential growth, and be the very best that you can be. Have a great week. Bye-bye.
Be sure to click on the link below for your free 30-day MBS Highway trial.